Hi and welcome to Kohana Studio Podcast. My name is Kate. I'm founder of Kohana Professional, nail champion, nail educator, and nail tech with over 15 years of experience. Today with me is Amber, and we have a special guest, Luke Morrison.
My name is Luke, and I'm a chartered tax advisor and a chartered accountant.
My name is Amber. I'm the executive assistant here at Kohana, and I'm also an educator for Kohana Professional.
So in today's episode, we would like to talk about your business, about how to feel comfortable with taxes, with your money, with your success, okay? That's why we have few questions for our guests. We also ask you about what questions you have to our guests. So we have them all here written down, and we give few shots to Luke. So thank you so much, Luke, for coming today, okay, for your time. We will have few questions to you. So first one is, do I need to register as self-employed even if I only do nails part-time?
Yes, is the short answer. So kind of when you're registering to be self-employed, so your income is no longer, let's say, so I'm an employee of a company. So my income is taxed under, you have all these different like schedules. So it's Schedule E, which is your employment income. So when you're no longer an employee of a company or just a company in general, then that income is no longer captured under Schedule E. So now you're a sole trader in a way. So it's like you have all these different cases of income. You've like case 1, 2, 3, 4, and 5. So case 1 is kind of like for yourselves if you're self-employed, if like you're a plumber, electrician, a nail technician, the likes. Case 1 is like your trade income. So you would need to register online. You can do it very simply via revenue. I think like kind of people, there's no issue with picking up the phone to the Irish revenue. Like I deal with them on a very regular basis. They're very nice. I've dealt with a lot of tax authorities throughout the globe, and Irish revenue are by far the nicest to deal with. I just give them a call, ask them a few questions, and they'll guide you in the right direction. But there's loads of advice online. If you were to simply Google like self-employed registration, revenue guidance, you get multiple documents that the Irish revenue have put out themselves, and it's in very colloquial language. In other words, like it's just very simple you don't need a finance background to understand it. Obviously, like speak to your accountant as well. They'll guide you in the right direction. I think that kind of alludes to another question we have later on, but just kind of, let's say on the finance side of it, like things can kind of go messy very quick on the tax side as well as things. So you're best just kind of get an expert from the very start. Just kind of lean on them, lean on their expertise. Like they have years of expertise in that. Obviously, like you have all the information to hand, like you have all the guidance there, but their experience is invaluable, and that they know exactly what you need to do and just what information you need to have.
Specific kind of our business, isn't it?
Exactly.
Okay.
Yeah.
Mm-hmm.
My next question is actually to do with being a sole trader. So could you tell me what the difference is between a sole trader and a limited company, and how do you know which one is right for you?
Yeah, so sole trader you always kind of cover this in company law. So sole trader versus like a company itself. Sole trader is someone who has a nail technician shed out the back of their house, right? Is kind of, or even a sole trader would be the likes of your trades, your employers, electricians, and the likes. So sole trader, you're personally liable for everything that goes on in the business, right? So everything is set up by you. You're taxed personally on all the profits. So it's no different to you receiving an employment income, right? But you yourself have to kind of look after the taxes. So instead of your employer taking off your PAYE, PRSI, and the likes, you have to look after yourself, or your accountant has to do it for you. So sole trader as well, and kind of like, so you're taxed at your tax band rates. So you can earn up to, one thing always frustrates me when people say like, oh, in Ireland, 50% of your income goes away to tax. It's not true. Like, so you obviously have your bands, but people just aren't aware of it, that you're taxed up to 44k at 20%. Obviously, if you're married, it's beneficial in Ireland to be from a tax perspective. If you are married, you get 53k plus your other partner's income up to 35,000. That's also taxed at 20%. So essentially you earn 88,000 euro from joint incomes at 20%, and the balance at 40%. Obviously you have PRSI and USC on top of that, but you don't look at it from the point of view that 50% of your profits go to revenue in a way. And from a company perspective, so sole trader, like you're very responsible for everything yourselves. The taxes are probably a bit higher in a way, but obviously you're not going to set up a company from day one. With a company, I suppose you probably know, there's a lot more kind of admin to it, like setting up the company itself and the CRO. You have annual filings, you have a corporation tax return to do every year. If you have employees, you're responsible for that as well. If you could make yourself an employee, the company look after your own taxes. So yeah, the company side of it, I'd probably recommend from the start to just start out as a sole trader first. Obviously find your feet, don't incur all the expenses of paying an accountant to set up a company for you. And Joe, if you're only making 10, 20,000 euro a year, okay, further down the road, setting up a company is very beneficial because, for an example, let's say that you wanted to sell your business, you worked as a nail tech for 40, 50 years, right? If you want to go and sell your business further on down the line, okay, it's far easier to sell a business at the company, a registered company. Whereas if you're a nail technician, Joe, you may be selling on your list of people, your, let's say, in your assets, your kind of like the UV light that you were showing me earlier, and all the stock you have. Whereas from a company like Joe, from an investor standpoint, it's a lot more favorable for them to see that you have a company set up. You probably have all your filings done on time. Not to say that you wouldn't if you're self-employed, but obviously if you want to retire and you're looking down the line, a company is the best way to do it.
Okay, good. What should every nail tech be tracking when it comes to income and expenses?
Everything, I suppose. Yeah, it probably alludes to another point we were going to talk about earlier, but keeping separate bank accounts, right? It's very simple nowadays. It's probably a lot simpler nowadays to set up. I went through the process myself with another business I have that, like, we're setting up a company and then setting up a separate bank account. It's so easy to do it on Revolut nowadays. You can do anything yourselves. It's obviously accessible via your phone, whereas previously you have to go to Bank of Ireland, AIB, you have to put in like business application. It was a very drawn out process, but just keeping track of your, like, Joe, you don't be taking your Kohana business card to go to your food shop, right? So your accountant will go to your tax return at the year end and say, let's say, for example, you have 100k in profit, but within that are your personal expenses for stuff that doesn't have anything to do with your business. Like, so that 100k in profit might actually be 120k of profit because you have expenses in there that aren't directly attributable to your business. So you're not allowed to deduct those for tax purposes, essentially. So keeping track of your expenses is very important. Obviously, there's a load of different applications online now, kind of via your POS. But if say you don't have the funds to track everything via like a POS or an ERP system, Microsoft Excel does just
even
a good job.
Keep receipts and then put them kind of like list, yes,
exactly.
of your expenses.
Yeah, there's no, like, I don't think that you can be overkill in terms of the documentation that you keep. To talk to another point I'm going to go through, like, legally from Irish tax law standpoint, you're required to keep documents for 6 years, right? So
6 years.
do you know, for your tax returns and the likes, revenue can go back a period of 4 years to look at your past 4 years tax returns, right? But you might say, like, oh, then why do I need to keep it for 6? If revenue think that there's some form of like evasion going on, they can go back as many years as they like. Okay, so if they get, I don't know, a tip or they see something come up in their systems that would suggest that, they can go back as far as they like on the basis that there's evidence of fraud or tax evasion going on.
Mm-hmm. Okay.
Just to touch on things that we can, claim as our expenses. So obviously for nail technicians, it'd be like your supplies,
Correct.
your training, your salon uniforms. And what about the likes of maybe like diesel for your car or that type of thing? Is there anything you can or can't?
Yeah, there's actually specific tax law that looks at this and that. There was tax cases previously. People online would be like, this is so boring. But like someone tried to claim essentially that, let's say, if my place of work is in Sligo town and I'm driving 15 minutes from my own personal home house to town, there was a tax case that, like, the person tried to claim expenses because he's traveling to his place of work. There's specific tax law that says you can't take a deduction for that. The courts favoured in the position of the Irish tax authorities and said that, Joe, like, it's your choice to live where you want to live. Okay, you could live right beside your business, like, it's entirely up to you. So there's no deduction for, obviously, between your place of work and your personal home, there's no deduction. If you're going from, say you're going to like a nail technician fair in Dublin, okay, you could look at deducting the expenses from that, but it's going to be from your normal place of work, which is here, to Dublin, right? It's not going to be from your home house. They're quite strict on that kind of thing, and that they'll obviously, let's say from big companies like, they'll ask you like, where exactly did your journey start? Where exactly did it end? Give me the receipt. Give me the, the free now ticket and the likes. So it's a common question though, like kind of, but if you wanted to, it probably won't be worthwhile if like, let's say you're going to from here back into town for an event, like, I don't even know how much that that is, probably get a few cents back. But there are specific rates online that show you what you can claim. Okay. But yeah, no, not between your place of work and your normal home.
And if, this is just another quick question, if you weren't sure, would your accountant be able to advise you if you can or can't? Or
They should.
Yeah.
They should definitely.
Okay.
Yeah. If they can't, I'd look for another accountant.
Okay.
Yeah.
Perfect.
Yeah.
Next one. How much should we be putting aside each month for taxes?
Yeah, like it'll depend on your. Sorry, it depends on your cash flow. Like Joe, I think when it comes to, so you pay, let's say that your accounts, so you're doing your accounts from 1 Jan 2024 to 31 December 2024. That's your financial year. Okay, you have all your results for that year. If you're a sole trader, then you had to file your tax return by the 14th of November the year following. So you had to pay your preliminary tax and you have to pay your balance tax from the prior year. So what a lot of people kind of do is that they say like, they go along and say like, okay, I'll worry about the tax later. I'll use all my profits in the meantime just to pay staff expenses or buy a new piece of machinery. Then when it comes to tax time, people are kind of scrambling. To be specific about the question, it depends on your circumstances. I think in terms of what you're comfortable putting away, like I won't put away so much that like you can't run your business on a daily basis for paying daily expenses like staff payroll and the likes. 20-30% I suppose might be a good number. It depends on how much you earn as well. Joe, as I mentioned, for the bands, if you're a sole trader, like it's 44,000 at 20%. Above that is 40%. You have PSI and USC to pay as well. And then for obviously VAT as well is another big one. Like you file that a lot more frequently. Again, that depends on how much you earn and the likes, but like you file your return for VAT, I think is every 2 months or so. And then you make the payments then as well. So I wouldn't ignore the tax reserve in a way, put away as much as you are comfortable with, because then it's something that you just don't need to worry about then at the end.
Exactly. Yeah, I know this from even we have limited company and we sell the products, so I know we have to pay the VAT on the products. So yes, if you actually don't start saving upfront, then it can be hard to kind of like put money all together when the big number is coming, you know. So definitely saving upfront, it's a very good advice to do it.
Yeah, even to the point we said earlier, let's say, I don't know, let's say like all of your lamps and whatever in here just busted all in one day, okay, but you haven't set enough aside. Let's say worst case scenario, it's due when your tax is also due and you haven't put enough money away. It's kind of like you're leaving yourself in a very bad place. Not like it's either I pay my tax bill or I pay my staff or I pay for all my lights to keep my business running. It's not a good situation to be in. So just put the money away where you can.
The next question is it worth hiring an accountant even if you're just starting out?
Yeah.
Yeah.
Just like it's kind
Short
of
answer,
yeah.
isn't it?
It's
yeah,
good.
like I put in a way of that. If I was setting up a nail tech salon, I'd hire someone like yourselves to come and do it. I wanted to try learn out myself, but there's a really good book I was reading there recently. It's called like the E-Myth. So essentially, it's a really good example I think for that question. This lady, she worked in a bakery for someone else, and she said like, well, I could do this all myself. Like, she loved baking at the time, and then she went and set up her own bakery and the likes. And the bakery was doing well, but then she found that like she started to hate her job. She kind of like she was doing all the admin, all the marketing, all the accountancy side of it, paying suppliers, VAT. But then her core job, what she previously loved, was baking essentially. She started to see it as just like something to do rather than something that she wanted. If you want to take that from a nail technician example, if you work for someone else and then you want to go something set up for yourself, like you doing the actual nails of the part that you really love and the creative piece may become 20-30% of what you do, and the admin side of it will overbear you. So yeah, anything that you can outsource to allow you to focus on your own creative niche and what you're really good at, outsource it where you can. Like the cost of doing so, I appreciate upfront at the start will be a lot, but let's say if you want to look at this way, like the time that you would be trying to do the books yourselves versus what you could be doing maybe on the marketing side or doing a better job on a client far outweighs what you would pay the accountant.
Good advice. Leave it to the experts.
Yeah.
Exactly, leave it to the experts. what is the biggest financial mistake you see self-employment people make?
Financial.
Like financial, or maybe kind of like the acting, yeah, so just mistake the
Yeah,
people
probably not
do.
keeping enough like receipts and the likes. So kind of, it's very important to have all your receipts, kind of tracking stuff in general. Obviously, if you're not on top of it when it comes to do your return at the end of the year or the following year, and you're kind of like, oh, like how much did they actually take in? Like, did this fall into that year or this year? It can be quite messy, and it's something that your accountant will tell you, like, look, Joe, like, I'm only as good as the information that you give me, so be as pernickety as you can. And financial mistakes as well, being on top of cash flow, I think is very important. Like, Joe, to your point earlier, that like if you charge €50 for a 1 hour service, thinking that like that €50 goes into your pocket, like you've nothing else coming out because you've already paid for your supplies in advance, it's not a good way to think. It's very short-term thinking, in that like, Joe, you'll come to the end of the year and you may have paid for expenses in advance or payroll and the likes. You come to the end of the year and be like, oh, I'm actually in a loss of like 20-30K. Like, why? Like, Joe, I was taking in all that revenue all that time. So kind of doing a monthly cash flow is quite important. It kind of just allows you to, obviously, if you can't measure what you don't track. So assessing yourself month on month and making sure that you're on top of everything.
The next question I have for you is, what should someone do if they haven't filed or tracked anything for a while?
And this is
Stressful.
such a common thing with nail techs.
Yeah, like I think I give it to you now. Like, so let's say like you haven't tracked anything for a while, and it's now coming, and you don't have an accountant, and it's now coming time for you to put together your tax return. What you put into your tax return in terms of your profits for the year, your revenue, you're entirely liable for what you put into that. Okay, if you put in, like, let's say the worst case scenario, you get a revenue audit, and they look at your tax return for the last 2 years, and they say you've earned €20,000, and you said you earned €30,000 the following year. Provide me evidence of this. Provide me receipts. And that goes back to the point around documentation, that you're required to keep all records for 6 years. Joe, you're in a very tough spot there. Like, if you come back and say like, oh, it was actually, let's say in the first year you said you earned 20 as a rough guesstimate, but you actually earned 35. Revenue be like, okay, you owe us the balance of the tax on that income, and there's all these penalties and interest that you are now late for because of that. It's a bad position to be in.
You just have to be organized from the beginning.
Yeah, like, kind of. I know it's probably like follow the advice you give someone else. I think kind of like, you tell everyone else like, oh, keep on track of everything, and like, but then like if you're lucky yourself and you're not following it, I mean, yeah. And then like say if you had an accountant and you didn't keep track of everything, your accountant really should be following up with you in the interim to be like, just want to make sure that you have everything coming up to the deadline, the likes. But again, like when they file your return for you, like you signing off on it says that everything within there is true and correct. Okay, so yeah, as I said, the information is only as good as you can provide.
So for example, just to make it kind of simple as it is, for example, nail techs, if it's small nail tech, just, register self-employed. And for example, they don't have even card reader. Everything is cash flow.
Yeah.
Yes. So for example, if they have a book and they
yeah.
put date and then what clients they did, how much they charge. Yes. So they have it kind of a record of that. And then they can have kind of all the receipts. Yes, and then they have the receipt itself as a proof, and then they write whatever expenses they have. Okay, so with that will be okay for an accountant to give.
That is a record.
That's a record, yes.
Yeah, exactly. So the accountant, obviously, when they're
because the accountant have to kind of finalize the year.
Yeah, you're probably making it a bit difficult for your accountant, if I'm being entirely honest, in that they'll have to transcribe what you've written in throughout the year into an Excel file or onto, essentially what your accountant usually is doing is that they'll use a computation software or they use Excel to input everything into your Form 11 or to your CT1. Your CT1 is your corporation tax return, your Form 11 is your income tax return every year. Joe, like, if someone handed me a paper file with like writing like 28th of September of this, like, yeah, I'd probably huff and be like, God, this is gonna be so much work for me. And at the end of the day, like, if your accountant is spending longer on the work that you've given them, they probably would charge you a higher fee in the way. So kind of a record is, to your point, that is a record, but try keep it online as much as you can. Keep it in Excel, keep it somewhere safe, Google Docs, Google Drive, somewhere accessible.
So something like this, what I said, but actually in the computer.
Correct.
Okay,
Yeah.
I'm just old.
That's all right.
I remember when I started, that was the way I was doing.
Yeah.
So okay, so move that, but to online system, kind
Correct.
of like, or
Yeah.
Google Docs or something.
Yeah, exactly.
Good. And now we have some questions from our listeners. Yes.
Cool.
Any advice for setting up a business if you are a one-parent family?
Yeah, I suppose there's a few lifestyle kind of choices there. Setting up a business for a one-parent family, like time is probably your biggest issue there. So setting up a business, like if you want to set up a sole trade, it's probably not as there's probably not as much documentation required as there would be if you want to set up a company as such. So you're kind of registering yourself for income tax in a way. You can do it online, very simply. Call the revenue; they will answer. The phone lines aren't open that long throughout the day, but just look them up in advance. But like setting up for yourself as a sole trade is probably where you want that individual wants to be. Set up from the start. Again, just keep track of your records. Keep stuff in Excel files. Keep stuff in probably Excel files, but probably more easier to hand over to your accountant at the end of the day. To the individual who's thinking about doing it, I suppose if you have, my advice doesn't really change if you're a one-person family or if you're a family of multiple people. Like you still have the same filing obligations regardless of your family status and the likes.
And one parent, what is the limit of earnings per year?
€48,000 up
48.
to 20%.
Yeah,
Yeah,
20%.
Anything above that will be taxed at 40%. But even the 20% is you still have USC and PRSI on that. But like you see the bands for PRSI and so PRSI is a flat rate, but USC is kind of like the first rate is €12,012 at 0.5% and so on, 2,000, and then like maybe the next 5,000 or so at another percentage. Like they don't make it too easy, but like there's loads of like income tax calculators out there. Like the budget is coming up, it's being released next week, and you kind of see the rates are probably going to change again. So, but what we've seen from the last few years is that like those bands have gone up pretty much every year in terms of people paying less tax, and that like you're previously, I think when I started working, like it was like €40,000 to 20%, whereas now it's 44,000. Okay, it's going to go.
When I started, it was 38.
Yeah, like, do you know what I mean? So I don't think the government are against this in any way, shape, or form. They listen to people as much as they can, and they know the tax rate is high here. But like if you look at the UK, I think like for you to hit the 40% tax rate, you have to earn like over like £100,000. Just so like that's the kind of issue we have here in Ireland, but that's just the way things are, unfortunately. Yeah.
The next question from our listeners is, how do you go from working in a salon to starting on your own? So I assume that's how do you go from being employed to just starting up as
self-employed? Yeah. So like your previous employer would have given you, I can't remember if it's P60 or P45 when you've left, just saying like these are all your earnings up to date. You'll then go to revenue and kind of set yourself up as someone who's registered for income tax. Like you will file a tax return every single year and you will report your earnings and the likes. It's obviously like taking the leap to become, I mean, people nowadays, let's say they probably jump over their head first and think like, I can do all this myself and I'm going to make a lot of money in the meantime. Then leave your job and all of a sudden like you're struggling to make rent, you're struggling to feed yourself in the worst case scenario. But I'd be very certain that you have a minimum level of cash flow coming in every single month if you do decide to leave your job and go out on your own. Obviously, everyone hears these stories of like, oh, I left my job, left college early, like to go set up these businesses. Like those people had very established businesses whilst they were already in their employment or in their college dorm and the likes, making multiples every single month. So I'd just be very sure before you do go inside that I probably know yourselves, like it is a long journey and that it is stressful.
To be kind of balanced, isn't it?
Yeah, exactly. Like you don't want to be going into overdraft every single month. Like it's a stressful place to be. But from an admin standpoint, if you want to be a sole trader, you'll have to recommend getting an accountant, set yourself up on revenue, and just be prepared for the fact that you will be doing a lot of stuff yourself. You will be filing your own tax returns if you don't get an accountant. You do have a lot more obligations in terms of paying taxes and just, I suppose, there's a lot more to it than people think, I think.
Mm-hmm. How do you implement VAT into your prices?
It kind of depends on the extent of like the person, like is the person like doing it in their own home, like are they actually, do they need to charge VAT, or do they have established business like Kohana here? So like you don't have, there's a certain threshold for which you have to register for VAT here in Ireland. If I remember correctly, so 85,000 euro if you're supplying goods. So obviously if you're an nail tech, and then it's 45,000 euro, I think it's 42,500 euro if you supply just services only. I appreciate here there's a nuance kind of law as well that like if you're supplying services and you're supplying goods, then I think it's like 90% of one or the other that you're required to register. So if you supply just services, right, then below 42,500 euro of earnings or supplies that you give, you don't have to register for VAT, okay? But
can I just ask, is this 42,000? Is it from profit or is it from
revenue?
Revenue, okay.
Yeah, exactly. So kind of, so say for like, but everything below that, okay, so you probably know it, like you've, for your VAT return, you have box T1 and T2. So T1 is the VAT on your revenue. So say that you, I don't know, like say you charge someone, I know this wouldn't be the case, like someone 10 euro for a service, okay, you have to add, let's say it doesn't include VAT, so you would add €2.30 on top of that. That's €12.30 that you're charging to the customer. So you're kind of collecting the VAT on behalf of the Irish revenue. So that would be your box T1, right? That's what you have to return to revenue is every 2 months or so. It depends on how often you file. Then for, let's say that you also buy 10 euro worth of nail supplies, they include VAT. So you can also claim that VAT back. So that would go in box T2. And you essentially take one away from the other. Okay, so like you're entitled to that VAT back, but well, sometimes that like people would, they kind of say like, oh, like, I can claim the VAT back on that. And I'm kind of like, well, are you charging VAT as well? And they'd be like, no. I'm just kind of like, okay. Yeah. It's not as, yeah. If you think it's a gold mine, then you're kind of like, oh, you have to also charge VAT and you have to return that. From people kind of think that I thought I could just keep that myself. It's like, no.
So from the products, when you're selling is 23%, and from service?
It depends. There's a whole rate of different services and different rates. Like it goes like, I think like if you take baby clothes, for example, they're 0%. You have 13.5%. You have a 23% rate as well. There's loads of different rates. You can look them up online. It's very easy. Like if you just look up.
Okay, perfect.
Yeah, it's very like there's a different rate for a magazine versus a newspaper. It's very specific. That you may have a different rate for, if we want to take like, this is a very specific example as well, but like a chocolate coated biscuit in Ireland has a different VAT rate to a biscuit that doesn't have any chocolate on it. Right? Crazy specific. They'd always ask you in tax exams like, what's the difference between these two products? And yeah, it gets very down to the line. It could even come down to the content of the acrylic in the nails, like in terms of how much the VAT rate is. So yeah, there's a lot more to it than people think.
It's interesting. The next
Fun
question.
fact.
Fun fact, yeah. Do you legally need to give a receipt to your clients? So I assume this person is just doing a nail service. Do they need to give a receipt when they're done?
If they ask for a receipt, I think you are required. It's kind of like when I go to the food shop, like, the people in Dun, they're like, hand you the receipt. I'm kind of like, oh, my bag is already full of them. Like, I never use them. But like, if you see them, like they take it, they scrunch it, they throw it in the bin because everything is already recorded via like the till. So kind of like here, let's say if someone asked you like, oh, like say that you did someone's nails and then they were going at the door, you're like, oh, do you want the receipt? Like your system already picks up that sale. Whereas if you didn't have that system as such, like that receipt could be your record as such to say that you made the sale, it had this amount of VAT on it, here's the amount exclusive of VAT, and you can keep that for yourself. Do like kind of in restaurants, for example, when you make like an order, they'll stack everything up like on it's like the spike, whatever.
Yeah.
So then when they're totting up the till at the end of the night, they go through all the receipts and see, okay, like we made this amount of money, like Joe, but the till only has like, there's a fiver missing, like someone took a fiver in a way. So that's the receipt side of it. But to answer the question, if they ask for it, you should be providing one, but otherwise you don't. I'd recommend keeping one though, just for your own records.
Okay, perfect.
How did you find the transition from self-employed to obviously having a company?
To be honest, I am the creative person. So I create Kohana, and then my husband behind the scenes, he's doing all this kind of like legal job, I would
Admin,
say.
yeah.
But I was on the beginning. I was the self-employed, so sole trader. Yes, and I did in the very old-fashioned way.
Yeah.
So, but I had
Pen and paper.
very old-fashioned accountant as well. So
Okay.
she was kind of like, when you go to her, she had everywhere books open, like everything writing. So I think everything changed last year, since like maybe few years, everything go really online and computer, So, but yes, we open academy, and also education is kind of like, brings lots of revenue. So then we selling products, so as well was loads of revenue start coming from the sole trader. So I have to say I had an audit from revenue also.
Right, okay.
Because we jumped in 1 year, we jumped from lower revenue to quite big revenue, and the revenue was interested. What is going on there? It's registered as a nail salon.
Yeah.
And we had an audit. I remember it's
Okay.
stressful. It's stressful, but everything was okay, so it was fine. But it is stressful. They ask actually everything. They go through every page of the record.
Yeah.
Now we are the limited company. So yeah, it's like I think for me everything was really smooth, because it's just with the growth of the business, it was very normal. Was natural to kind of like, then we changed the accountant as well, because the lady we had, she even say like, you're a little bit start too big for me. So
Right.
she actually just was honest with us, and she said you should go to
Good.
kind of like a bigger accounting. Yeah. So yeah, it was smooth for Kohana was smooth, and yeah, it's good. But I still don't have a clue too much. I only can advise like we did before, so you can watch previous episodes. We talk about the pricing as well, and the tax on the prices. So this I know from my own experience, you as well. So we were talking about the pricing, but yeah, mainly we leave it for like you said, for a specialist, for somebody, for expert who
Exactly.
knows what they're doing. We give everything what we can. They say like, do this way, do this way, do this way. So we just do it. And now we have a system. We have a system, like you said, this POS. We have a system that's record all the invoices.
Nice.
That's why it's just for accountant. It's very easy, simple to see.
Yeah.
For VAT and for everything. So
Exactly. Yeah.
yeah.
It's cool. It's great.
What must you have when you get an inspection from revenue?
Yeah, I said like everything. They
All
can
the
ask
records.
for all the records, all your financial records and the likes. If you're getting an inspection from revenue, there's so much to it. Like there's kind of like level 1, 2, 3 in terms of interventions and the likes. It could be a simple inquiry from revenue via ROS, or like a letter to you, or it could be a revenue officer standing outside your door.
Yeah.
Like that's the extent of it. So in terms of what they could ask for, the lease on your property. They could ask for all your legal documentation, all your invoices, all the information from your POS. Essentially, I don't think on the day, like they'll have to tell you like what tax head it's usually under, and like it's corporation tax, personal tax and the likes. But like the extent of the investigation is not limited to what you have available. They could ask for it, and if you don't provide, there's obviously, you have this thing called qualifying disclosures. That like if you, let's say you get like an inquiry and you make a disclosure at the start, say like, oh sorry, like Joe, by the way, I've made a mistake here, like I'm kind of owning up to it now. The extent of the penalties that you'll be applied with will be lessened, and you have a certain amount of days in between that. Your accountant should, I hope they know this, right? But there's no extent of what information that they could ask you for.
And for how long back they can ask?
6 years.
6 years.
Yeah, if they think there's fraud or evidence of tax evasion, they can go back as many years as they like. Yeah.
Okay. Good. So that's all my questions and
that's great.
listeners.
Yeah, thank you so much.
Thank you so much. Thank you for all your answers.
No problem.
So that's it for today. Thank you so much for watching and listening. Please don't forget to give a follow to Luke. This is his details we put for you for Instagram, for Facebook and for TikTok. If you enjoy, please subscribe and give a like for our podcast. And today I want to wish you a lovely day and chat to you soon.